Remember prior weeks we saw it rally. This big run up really caught its legs when Trump announced the import tariff on copper. All stages of production, whether it's just raw ore, minerals, all of that, or um, fabricated copper products that have already come out of the smelter, everything was tariffed. So this was really an effort to protect the domestic production industry from resource development, project development at the production stage to smelters, et cetera. So this week we saw kind of the continuation. This was not yet the local top. If you thought that Trump tariff was a sell the news, that's not what we got. Um, Copper continued to hit more all-time highs this week, which in my mind is signaling your problem here. So if you think about kind of the reputation for copper in a global macro sense, how's the nickname Dr. Copper? Not for healthcare or anything like that. It's because it has a PhD in global economics, right? It's your barometer for um, GDP growth, economic activity taking place. So high copper prices in the past is generally a sign of an economy that is working well, running at full speed, all of that. Um, Contrary to that, like depressed copper prices, like we saw in 2008 or 2020, 2016, you can see this on the chart. That's kind of generally compatible or thought to be with a sluggish or under utilized, underclocking global economic growth, right? So the fact that right now, we're seeing copper scream. Um, if you just took that mindset, you would come to the conclusion that hey, economic growth must be just rip roaring. Things are great. I don't know that's actually the case though. I think there's something interesting going on here under the hood. And before I get into that, let's look at copper's cousin, oil, right? So very similar. If you think about economic growth, high oil prices, a lot of factors go into this, but as a measuring stick, right? High oil prices would reflect a strong economy, robust economic demand, people filling up their tanks to go take a vacation, summer season, all of that, or
Shipping.
um, shipping, or large John Deere, Caterpillar, heavy machinery getting filled up with several gallons of diesel to work on new construction projects, stuff like that. So low oil prices are also synonymous or correlated with sluggish economic growth. So same thing here, low oil prices in 2008, 2016, 2020, all of those in recent memory are kind of stand out as the low points on economic growth for the U.S. and globally. But right now, in particular, I circled in red, we're getting different signals from copper and oil, right? Copper is saying this economy is roaring, right? There's so much demand, all engines go, right? Oil is telling you the exact opposite uh, from the look of the charts, right? You've still got this downward trend since Q2 2022 after that first kind of wave of the Ukraine conflict. Oil markets rolled over and they've kind of been in decline ever since. You see that with a lot of blue candles on that downtrend on the quarterly chart we have presented here. So how can those two things be consistent here? Which one's right here? Who's telling you the truth? Is it Dr. Copper, or no one says Dr. Oil, but is it oil, right? And I think that's where you get into. I think something major has changed in the background of like resource markets um, in the last 5 years especially, I think it's very apparent. But it's been underway since probably 2003. What do I mean? So if you look at both of those two markets, copper and oil, take the ratio of copper divided by oil, you get the copper oil ratio. I've put in white the NBER's recession indicators. We only know these after the fact, right? You get to go right, go, you get to go look backwards, and in hindsight, you just say, "Hey, the U.S. economy was in a recession here." You don't know that until it's well past that point, right? Um, but if you look at the orange line, plotted out the copper oil ratio, and the little blue line horizontal, that's kind of a high water mark for what we've seen. Going back to 1988 is the furthest I could go back and get this data from futures markets on my Bloomberg terminal. But generally, what we saw every recession prior in our lifetimes prior to COVID, right, was a bottoming in the copper to oil ratio, right? Which, what did that mean? Well, we already know, like in the recession, oil prices go down. What actually happened is copper goes down further, right? So they're not necessarily substitute goods, right? Um, copper goes into the house, the wiring, all of that. The oil is moving the dirt to put the house in. But it tells you where was your limiting resource was out of the oil, right? The oil held its bid in the downturns, and copper as copper dropped further, right? And up until about 2003 on the chart, I think we were operating in an environment of lower highs, lower lows. But something changed. It became apparent. It was mid 2003, after that 2001 recession, which followed the global recession from the 1998 era Southeast Asian currency crisis. 2003, as we were heading into the housing bubble, heading in 2003, heading into the housing bubble, headed into 2008, we bottomed on the chart of the copper to oil ratio. And since then, it's been higher highs, right? Higher highs and higher lows. And, while we see bottomings kind of consistent with the recession still up until 2008, even 2016, the script flipped with COVID. COVID was like your um, mid-stage transition event where we crossed over from the old world into the new. What do I mean by that? Well, as everybody knows, like with oil, we had a dynamic where we saw negative oil prices, right, with the shut-ins, with the lockdowns. You didn't see copper sell off in the same degree with that Q2 2020 kind of lockdown induced recession as we saw in oil. And copper, that copper to oil ratio just spikes, which obviously makes sense as that denominator trends to zero for the oil price. Um, but I think that's your signal now when the global economy and the U.S. economy hits its boundary conditions in terms of the actual resources available in the economy, the actual the key limiting input is now copper and on this electrification trend, which is also showing up in these things like battery metals, rare earths, etc. And we're at the point now where the metals, semiconductors, etc., they've become more important than just that oil to help fill up your diesel powered heavy machinery to move earth, right? So I think if you're looking in the recent rearview mirror here, past that COVID recession line, we saw the local low in copper to oil right about 2022, um, as the commodity cycle rolled over after the Ukraine invasion. But ever since, we've just been going up and to the right, um, which is really telling you, in my opinion, um, the the way that the economy behaves in this new framework, that today's real world, is going to be totally different than whatever rule set we got used to from 1980 to 2020, right? And we can go in there what that means. Hey, if the actual U.S. economy does slow down, at this point, it doesn't necessarily mean that you're going to get input price reductions in your metals like copper, platinum, palladium, et cetera, the rare earths. You may see depressed oil prices. Is that good or bad? Well, think about the background here. In the last 15 years, uh, global energy markets, the fastest growing producer has been US shale, right? Just driven by the hydraulic fracturing technology boom and the supply that that has um, kind of unlocked and turned economic that wasn't before. So that's turned the US into an oil and gas producer. What we aren't is a metals and copper producer, right? And that's where this Trump executive order or new tariff, specifically targeting copper products in June, is really starting to make sense. We produce the thing that we can produce, the oil and gas, that wants to go down still in an economic slowdown, which is still okay, right? You can fill up your car if you're an American, you can take a vacation, whatever. Life gets cheaper somewhat. But the things you actually need to win in the 21st century, bigger electrical grids, more energy or more power capacity to power AI, semiconductors, all of that. Uh, Building out, drone fleets with those rare earth magnets, all of the above. Those things that you actually need to win for your economy in the 21st century, those are what you don't have, right? So I think it'll become clear as the U.S. Now, I think the signal has flipped to instead of this ratio bottoming in a recession, same thing we talked about where on a trend line, right? Prior resistance turns into support, whatever. It's that same flip, right? At this point now, when your economy is running into its constraint, instead of materializing in a low copper oil ratio, it's like, all right, it's going to flip. You're looking for it to show the other direction around. Copper to oil ratio spikes. That's a bad thing if you're an energy producer like the U.S. is and a copper importer, which makes it just puts into context what we just saw in June and why they're so important. The copper tariffs and then these domestic production deals that you've seen with MP Materials and its counterparties, the Department of Defense and Apple, taking place over the last 4 weeks. So I would say keep riding those trends. But if you're a asset allocator, a wealth manager, I would say it's still very, very early on your typical financial advisor from coming to this realization. Still a lot of, I guess, prior kind of brain wiring, hard coded lessons, rules of thumb, all of that locked in. It's going to take multiple cycles for um, the market, in my opinion, financial markets to really incorporate this into capital allocation and what's going on. But I think your writing is on the wall when you see the U.S. Department of Defense getting involved in financing domestic, metals and resources production. We're in this new world already. It's here.